Well, good morning. It's Richard Pears from FinextraTV, and I'm delighted today to be joined by Professor David Hill. He's the chairman of Environment Bank. I'm interested in the conversation today, particularly in the light of the White House announcing that part of their economic measures is going to be including natural capital. And as this policy and regulation ratchets up and includes nature as a key part of how we address climate change, I think that David is going to be a perfect guest today to talk to us a little bit about how he sees this world. So, David, good morning.
Good morning, Richard. Nice to be with you.
Well, yeah, thrilled to have you on board. And tell us first of all, a little bit about where you come from in this and who Environment Bank are.
Well, I spent my early career doing a lot of ecological and environmental impact statement work. And probably after about 15 years, realized actually it wasn't really delivering anything, to be really honest, for nature, natural capital, biodiversity, whatever measure you wish to make. And so after that period of time, I decided I needed to get the system changed if I possibly could. So I set up the Environment Bank in 2006 as a means really of lobbying, government to change the way the development sector addresses biodiversity impacts. So 2006, I'd been doing lots and lots of ecological consultancy. I sort of stopped that at that point, and I went into looking for a measure of how we could address biodiversity impacts and offset the residual impacts from development accordingly. So I started off looking at how to change the planning system, and of course it was incredibly difficult because it's enshrined in history. The way we do things is pretty glacially slow, not just in the UK, I know. But by that time, 2006, I was a founder member of the government's statutory advisors on nature conservation, Natural England. And I worked there to sort of say there must be a better way of doing it. So came up with the idea of offsetting impacts from development. So taking away the liability from the developer into a third party environment, and effectively did that. Went to speak to about 15 ministers of state and 5 secretaries of state for the environment, and eventually in 2021, the government made it law under planning rules that all development above a certain size would have to deliver a 10% uplift in the biodiversity as a result of their development actions. So that was a really major thing, because it meant that now biodiversity was going to be taken really seriously, because if the developer didn't deal with the issue of biodiversity properly, they wouldn't be compliant with this new law. So the government introduced that, and there's a 2-year transition period, but it goes absolutely live in November 2023. And the rest is almost history, that we are now here with a new asset class that we can measure on land. And the Environment Bank is really all about delivering sites of great nature conservation value, where we raise value of biodiversity and we sell that as a creditized model to the developers to make them compliant with the new law.
And so you're not a bank in the traditional sense of a regulated financial entity. Am I right in saying that?
Exactly. So the reason why I called it Environment Bank was that I wanted it to be a bit of a catch-all, and it was based a little bit on what was happening in the United States, where certain players were setting up mitigation banks, and these are land banks. So I used the term environment because I didn't really want to constrain the model of what we wanted to do just to ecology. So I didn't want to call it ecology bank or biodiversity bank, because I could foresee that in the future that the asset classes that one would derive from land to enable us to address the environmental problems that we've got would be beyond biodiversity. So I took a bit of a cop out and called it Environment Bank. I suspect that if I were to try and register the name Environment Bank now, it wouldn't be allowed because of the regulations around financials. But having said that, I'm pleased that I did, and I think the brand speaks for itself. It's by probably by accident rather than better judgment, it's come up with quite a good name that everyone now seems to know about, which is really good.
Well, and in truth, if we think about it, we're banks, we think of sort of holding all our assets, and really the environment, has to be, the biggest asset that we've got to be looking after. So, very, very prescient. So tell us, as you go through this, we can see, I think we understand, the property and taking it away from the developers, to people who have a specialism, and so that you can go through the process. Tell us how you you measure and manage this, and what sort of, if you will, scientific basis and veracity that you deploy, so that people can ask the question, well, hang on a minute, can I trust this? Can I trust this fella, even though he sounds like he's talking a good game? How do we prove what you're up to?
It's a good challenge. So there are three things I'd say. One is sort of having built up a reasonable reputation around the environmental side, and my background is in the sciences. So I did a doctorate in population dynamics of birds, of all things, which is quite mathematical, I guess. And so everything that we do in the Environment Bank is based on the science of how ecology works, as best we know. Also, high integrity and transparency, really important to us. So we do a lot of monitoring and audit of everything that we do, and we make that fully available and transparent. But how it works is that a developer comes along. Let's say he's going to have a housing scheme for 1,000 houses in a planned development in an allocated area. He or she will measure the number of biodiversity units that are in that site at the current time. They then overlay that with their master plan of what they want to develop. And let's for example say 100-hectare housing scheme will probably on average have maybe 300 to 350 biodiversity units on it if it's arable farmland with hedgerows, a few copses, etc. We would his consultants will measure that the number of units that are there. Let's say there's 360. He or she then adds in 10%, so it takes it up to say 400 units. So in order to do that development, the developer has got to create 400 units. Now they can do that some of it they can do within the boundary of the development site, but as you can imagine, it's quite difficult to fit really good quality biodiversity within, say, a housing scheme. It's even more difficult to fit it within the boundaries of a commercial warehousing or logistics plant or an infrastructure development. So they will maybe put 10 or 20% of that 400 unit within the boundary of the site, but that leaves them with 3 to 350 units that they need to find elsewhere. And it's that bit that wasn't happening previously. So when developments were happening in the past, before this law came in, they would fudge it, I'm afraid to say. And we as ecological consultants had to almost go along with that. We do whatever we could, but when it came down to getting a planning permission, often the developer would go back with a variation on that permission to remove the biodiversity stuff that they put in there. And that's where we were seeing an attrition in biodiversity in the countryside and elsewhere for that matter. So you get the metric that's been created by government, which we help to write with them, but is definitely a DEFRA-based metric. And it works on three things. It works on the area of a habitat or a sort of biodiversity area that is being potentially affected, the condition of that habitat and its distinctiveness. So where you've got big areas which are quite distinctive in their habitat type and they're in good condition, you end up with a bigger value for biodiversity units. And that means that you have to have a bigger offset for that. If you've got a site which is quite small, very poor distinctiveness and very poor condition, the obverse is the case. And so they will then come to the Environment Bank and say, we need 250 biodiversity units of this grassland mix or whatever it might be. Can you find us for that? Now, what doesn't happen is that sites that are of good biodiversity value, certainly in the UK, should not and generally are not able to be developed. And that's the fundamental principle. So you must avoid those areas, and in balance, practically everything is. But when you get to sort of moderate biodiversity, those are the sites where, you know, significant development really does have a significant impact on biodiversity. So it's to that area that we're playing to, because otherwise, if you say to the developer, you've got to conserve the biodiversity within this site or improve it and do your housing scheme, it ends up as a fudge because they can't do it. So it's much better to admit to that and then look at sites which are big scale that we're creating within a certain radius of the development allocation, but so that we're not losing biodiversity from the general region. That wouldn't be appropriate. And that's what we're now engaged in doing, is setting up habitat banks at scale across the UK.
So then, separate from that, you're dealing with landowners that want to engage with you, and then how do they come into the equation, and what's in it for them?
So on the demand side, we've measured all the demand that is likely over the next 10 years through the local plans of planning authorities. So we know we have a good match of where the development pressures are and how many units of biodiversity are going to be required over the next 10 years, which is a pretty major exercise. So that's the demand side. And then absolutely, as you say, the supply side relies on landowners, farmers, and other bodies that have land coming forward with sites that we can then engage with. And I was really quite keen to make sure that if we do this biodiversity recovery and nature recovery and offsetting, that actually we don't just go and try and buy land. And when I set up the Environment Bank to start with, I had this idea that I would try and buy land and put it down into, but you would need so much money to do that. And you'd end up locking up lots of money in capital, and you'd also put the sites in the wrong place. Undoubtedly, you would. And the final point of the problem with that was that land very rarely comes up in the market, on the market in the right place. So we have a very open registration process whereby landowners and farmers can come to us and say, we've got a parcel of land, 20 hectares, 100 hectares. We'd really like to talk to you about whether we could become one of your habitat banks. And that's where we are now. I think we've got around 650 landowners and farmers registered with us. And we then have a triage process where we go and look at the site and look at its position in relation to what's called natural character areas. And if that all works together, we'll then come out with an offer to the landowner. And we then say, we would like to lease the land from you for 30 years, and we will pay you all the upfront costs of habitat creation. And then we will pay you a rental, including a management fee to manage that land for 30 years. So we underwrite it all, and we take all the risk. And the landowner gets a constant income stream guaranteed for 30 years. And from that, on the basis of that, we have ownership of the credits that we can raise from that land.
Yeah.
The biodiversity net gain credits, as they're called, we measure those, and we can probably get 5, 6, or 7 biodiversity net gain credits per hectare, and we then sell those to the developer who require them for their compliance with the new law. And we find what's been fascinating is that within the last 15 months, we've gone from a position of it's quite difficult to explain to the landowners and farmers what we're about, to one in which we're really well known now. We've got so many good landowners and farmers coming forwards, and the brilliant thing about that is that landowners and farmers now see nature as an asset that they can generate a revenue from, which gives diversification. And that is the only way we'll get nature recovery. We will not do nature recovery by taking a few grant money from various bodies with, say, a wildlife trust and putting it into a small parcel of land. We'll never get, that's important, but we will never move the dial on biodiversity recovery.
It's
So
amazing. I mean, it's just gone from sort of policy wonks talking about it through
yeah,
to country file doing case studies, and I'm seeing people, landowners in crypto conferences, talking
yeah,
about it. So it's extraordinary how open-minded they've been. So tell me, obviously we talk to the financial audience, we talk to the technical audience. As you get to the financing of this, to allow you to sort of run the acquisition of the leasing and so forth. Does this, what you're doing, do you think it will help banks who are going to start to be tasked with measuring, the biodiversity impact of their portfolios and things like their mortgage-backed securities, and many don't know where to start, but it feels to me as though here you are doing all of this work on the ground, and obviously you're going to need access to capital to sort of keep scaling this forward. Does this become an exchange of information that helps the banks as well as helping nature?
absolutely. And the really good part of this is that we've taken probably 3 to 5 years to develop a metric, which is called the DEFRA version 3.1, I think we're at the moment. And there are various refinements that happen, but they're refinements that don't really impact on the financials. They're basically how you deliver on the ground. And so we've got that pretty well covered. But the way the metric works is, I wouldn't say it's simple, but it's a really very robust, in my view, accounting process for natural capital, certainly for biodiversity. And of course, there are a number of organizations out there measuring other aspects of natural capital that are important. And this is going to scale way beyond development. So the development sector is one impactor on biodiversity. The other big impactor, of course, is agriculture. And arguably, modern agriculture has had a far greater impact on biodiversity loss than has development. So we fixed it, I think, for development. We're now turning our attentions to how do we look at a whole range of corporates that have a potential impact on natural capital. And the key measure for me is from the World Economic Forum, working with the OECD, where it's been calculated that some 55% of global GDP relies on what nature provides. Now, if you are a corporate entity and you are operating a significant business, or even an SME, you really do need to know what your risks are associated with nature. And it tends to sound a little bit sort of fluffy that nature is important to us, but absolutely, it's economically critical. Climate change is one existential threat. Biodiversity loss is the other existential threat.
Absolutely, yeah.
And so getting the two working together. And so now we're shifting our attention into the corporate market. And I think that's where the banks will come in to their own, particularly where they're lending or they are investing or others are investing in corporate entities for their own growth. Those corporates are going to need to know what that potential 55% risk looks like. And so we're going to see an explosion in the market for ecosystem function restoration. That's basically what it's about. Because if we don't, we won't be resilient to further environmental shocks, and we will just see a continual attrition. And our whole way of life can be changed by the loss of biodiversity. So it's not about, it's not about the luxury of having nature and that you can go and see on a weekend. It is absolutely not about that. It is about being able to get investment into rebuilding ecosystems that will protect us going forwards into the future.
Well, I mean, obviously, the Dasgupta review spoke about,
Yeah.
all of this and the externalities and how do you price it in a sort of an inflationary world. But I think what you're doing is if you can measure the impact and you can in a sense securitize it, but actually also, through various secure mechanisms and privacy mechanism, I'm sure, make this known to the banks that are backing you, then essentially you can start to see they understand it, they can risk manage it, and therefore the capital can flow. Now, we remiss of me not to ask. I mean, the normal sort of rock that gets thrown at this sort of stuff is, oh, but food security. We can't be taking farm land out of production. There's a well-known answer to this, but how do you address that challenge?
Yeah, and it is. I mean, particularly at the moment, cost of living rise, of course,
Yeah.
it comes into play, and it is pretty awful and difficult to say. But the cost of living rise we're seeing now, and even coming out of the pandemic, and even COVID, even the sort of fallout of COVID, are blips in this when you consider the full impacts of climate change and biodiversity loss and how they will manifest themselves in the future on our everyday lives. And I think that the food security issue is still a bit of a myth in reality, because the way we're farming at the moment is really generating income for agricultural machinery, agricultural chemicals, and seed merchants. The farmers actually are not having a great deal out of the thing that we think farming is about, which is producing food.
Mm.
And so, when you look at new models and approaches to food production, which is around agroecological approaches to farming, new technologies, regenerative agriculture, which is another word, I suppose, for agroecological approaches to farming, that's where the food production will lie. And then the margins from farming will be made by not having to spend so much money on expensive inputs, and particularly at the moment, chemical inputs, fertilizers and pesticides have gone through the roof in price because of the energy situation, and many landowners and farmers are looking at a farming in balance with nature. So, for example, if you maintain stubbles or a crop on the ground through winter, you hold in water, which is better. And I think in the Fens this year, they showed that where farmers had addressed cover cropping and not doing deep ploughing, they were yielding more than those that were drenched in chemicals and were ploughed deeply, as the sort of has become a tradition. So agroecological approach to farming is definitely the way forwards. And so there are two arguments here, just quickly. One is that could you spare land for do your nature in these blocks or plots of land and farm the other to real intensive positions, so sustainable intensification. I think that's a misnomer and a myth. I think that you've got to integrate nature conservation, natural capital within the whole farmed landscape, so that you build a heterogeneous land cover which gives you the ecosystem functionality that we need to build resilience. So that's the way I'm pretty sure it will go. And I think then food security, food is secure, but we have to farm in a different way, and we have to produce different types of crops. And the final thing I'd say on that is, there are trends against eating as much meat now in the UK, and it's certainly happened here with us, and in many places, I'm sure. And of course, if you don't eat so much meat, you don't need the 50% of the cereal crop that is used to feed the livestock that we then eat. So that you can then grow more fruit and vegetables, and horticulture will come into its own. So I can see a change in agriculture driven by diet and health reasons, and also diversification into ecosystem function, which is going to have to be the case in the future.
Final question. If you think about this as to work on a planetary scale, obviously it's got to scale, across the UK, Europe, and across the world. A lot of people sort of throw their hands up and say, without China and India, it's not worth it. Do you see a way in that what you're doing is going to be replicable? How can people copy what you're doing, or how can you, scale globally yourself? How do you see that working?
Well, I mean, I suppose the inconvenient truth is the fact that the human population is, dare we say, too big, but we are where we are, and there are some really interesting and fantastic initiatives coming out of China and India to address their own ecosystem functionality, because they can see, as we are seeing, that continual degradation, short-term gain, is going to really hit hard. It's already hitting. It's already hitting. You look at Pakistan, for example, in terms of what's happening in relation to climate change impacts. But I think that what we're trying to do in a strange way, it's a relatively small scale in the UK, but we're already getting interest from other parts of Europe to say, could we set up your habitat bank model, which integrates with farming and food production? Can we actually use that model here to actually start to restore our own ecosystems? And I think the key for us is that as environmentalists or ecologists, we tend to, concentrate a lot on plans and planning and maps, but we've said, look, we just want to get on and do things on the ground. And I think that resonates with landowners and farmers, and it resonates with policymakers that see, actually, you're getting on and doing it, and you're using private investment to do that. So we know that what we're doing can scale across UK. The principles are exactly the same. The differences are that the ecosystems and the habitat types and the structure of land cover is different in different countries, but we can work with that.
Yeah, and I was going to ask, how do people get involved? You've answered the question really, which is, clearly you're open to the conversation for people to engage with you on your model, but also to share what you're doing so they can adapt it for their own country and their own biodiversity. David, thank you so much. We've run out of time. I think we could spend a good morning on this one, or certainly I'd be interested to. But for now, thank you so much, David Hill.
Great. Thank you, Richard. Thank you.